I am Leo Wang, and today we're unpacking a day of sharp contrasts on the stock market, where record-breaking optimism collided with significant geopolitical headwinds. The day began on a high note, with major indexes like the S&P 500 and Nasdaq surging to new record highs. This rally was largely fueled by continued excitement around artificial intelligence and persistent hopes that the Federal Reserve would begin cutting interest rates. Market analysis suggested expectations were building for multiple rate cuts in the coming year. However, that optimism was soon tested. The first piece of challenging news came from new economic data. The core personal consumption expenditures price index, a key inflation gauge for the Fed, rose to 2.7% in May. This figure was higher than anticipated, signaling that inflation remains persistent. For investors, this dampens the prospects of near-term rate cuts, as the central bank will likely want to see inflation cool further before easing its monetary policy. Then came the main event that sent ripples through the market. In a sudden and unexpected move, the United States announced it was terminating all trade discussions with Canada. This decision is a direct response to Canada's plan to implement a digital services tax, which would affect major American technology companies. The immediate market reaction was negative, pulling indexes back from their record peaks. This development introduces a high degree of uncertainty into one of the world's largest trading relationships and could lead to tariffs, impacting corporate earnings across multiple sectors. On a more positive geopolitical note, there was progress on another trade front. Details of a trade agreement between the US and China were confirmed, with reports indicating that Washington will lift certain restrictive measures, while Beijing will review its own export controls. This easing of tensions between the two economic giants provides a welcome, though perhaps overshadowed, piece of good news. So, where does this leave us? The market sentiment is decidedly mixed. We have a powerful tech-driven rally on one side, and on the other, we have stubborn inflation and a new unpredictable trade dispute. The key factors for investors to watch will be the fallout from the US-Canada trade situation and upcoming inflation data, which will heavily influence the Federal Reserve's next moves.